So I want to make a quick analysis on EURUSD. So I don't want this video to be too long, but basically there are two things that are very important, especially to the way I trade. You need to understand liquidity and market structure. Those two things are very important. You need to understand market structure and liquidity. Now, let me do a very quick analysis on EURUSD. Now, this is the 12-month time frame. Now we can clearly see we had this move, we had this break of structure right there. So now if I'm marking my level from this low to this high, which is my range that took out this high right here, so it simply means this level now becomes my yearly demand. Now on that yearly demand, let's go back to our candle. You can clearly see we had price came back into our yearly demand right here. So going back to our line chart, when price came into our yearly demand right there, we had this change of character, then we had this break of structure. So right from that moment, marking my range from this low to this high now, I have another yearly demand right there. So we don't need this anymore. That has been mitigated already. So let me delete all this. Now I have my new demand where price has been into since around 2015 or so. So now on that my demand, if you notice something, this is why I always make sure I use my demand and supply level, because look at this level now. We had a fair value gap right there, even though we respected it and moved, but price came back and took out this liquidity that formed inside that fair value because price wanted to come into our demand area. Now in our demand area we had this fair value gap as well. So in all, everything is pointing to the upside for me on the yearly time frame. And the next thing I mark is my external liquidity, which is this external liquidity here. That is a draw on liquidity where I'm very sure that price is going to be drawn to. So whenever price comes into this area, anything can happen around this area. Price might decide to break it out. Price might decide to, have a change of character or whatever. I'm not trying to predict the price, but what I know for a certain is that price is going to attack this external liquidity, this sell side external liquidity first. So I'm done with whatever it is I want to mark on the 12-month time frame. If price takes out this external liquidity, then my next external liquidity will be this high. But for now, I'm just working on this external liquidity. Now the next thing I do is using this 3 time frame for my market structure. I call this 3 time frame my structural time frames because the only thing I do on this 3 time frame is just to understand my market structure. Now sometimes market structure can be very funny. It's not your typical market structure that looks very clean and nice. Sometimes you have a very nice break of structure. Sometimes you would have a break of structure that looks like a contour lines, something like this. So it depends on the market condition. Don't expect your market structure to be like this all the time. Always expect something like this or something like this. So just have that at the back of your mind that market structure is not always the beautiful something to look for. So now these 3 time frame are called my structural time frame, where I try to look for a market structure that shows me the direction of moving towards my external liquidity. Now the next thing I do is go to my monthly time frame. I start from my monthly time frame to look for my structure. Now if there is no monthly time frame, if there is no monthly structure for me, I have the right to move to the weekly time frame. Now let's take for instance there is no structure on the weekly time frame as well. I have the right to move to my daily time frame. Now if by any reason or by any chance this 3 time frame is not giving me a structural structure, which is a market structure breaking to the upside. Since my bias is buy, I don't have any right to go to the 4 hour, 1 hour, 15 minute to start looking for structure, because I'm not a scalper, I'm not a day trader. So those time frames are for those that come into the market and move out instantly. So for me, the monthly, the weekly, and the daily are my structural time frame where I start looking for market structure to trade from. Now, if by any chance I had a market structure on the monthly time frame, I'm sticking to the monthly time frame. I don't need to go to the weekly or the daily to start looking for structures, because for any reason, price will always come back to respect the higher time frame and structures. Now, let's go back to this. On the monthly time frame, price took out this high right there. So if I'm marking my range from this low to this high now, this level becomes my monthly demand. Now let's go back and see how price reacted from it. Now you can clearly see how price reacted from it instantly, because we had this fair value gap as well on that level. So that was a very, very good area to buy from, Euro USD. And that was this year. This move started this year around February. Yeah. So now when we took this high out, we had another break of structure here. So the next thing I do is mark my low to this high, which is my range that took out that high. So automatically this becomes my new monthly demand area. Let me mark it so it won't get confusing. So let me delete all this, because I always like to let my charts very clean. So now we already have a monthly demand, and what do you notice? We had this fair value gap on that monthly demand, but I don't expect price to come back into this particular fair value gap, because this was a breakaway gap. But I'm looking at price to respect this area, because that was a normal fair value gap. For those that don't know what a breaker and fair value fair value is, you can check, you can watch YouTube's and watch it out. Then we have this breaker block as well right there. So this area is going to be an area of interest for me whenever price comes back into that level. So all I do right there is just to mark, to set my alerts around that area. So whenever price comes back into that area, I'll be looking to buy, because I don't want to be involved, because every area from this area to this price level now is a supply for me. On the lower time frame, this is just like me trying to buy in a supply, and my job as a trader is to buy cheap and sell high. So I don't want to be buying high at all. That's not a good business for me. So I'm not trying to buy from that area. I'm going to wait for price to come back, and sometimes price might not even come back to these areas before it gets to this external liquidity. But I don't care about that, because in most cases price always comes back. In most cases price always comes back. So that is my analysis on Euro USD. Thank you.